Let's talk about all of this stock market drama. On Monday, the Dow fell 1,600 points during the day and closed over 1,100 points lower than it was at the beginning of the day. That's the worst daily closing point decline on record. But don't freak out, the Dow still closed over 24,000 points, which is really high overall. Side note, for those of you who don't really understand the stock market like I didn't before I did my research, this is just a point system for people to keep track of the Dow index. The Dow essentially monitors market strength using companies that are samples of the market. They take the average value of those companies to see how the companies and the overall economy are doing. But back to the point. The actual percent change for the Dow Monday night was negative 4.6%. Compare that to when the Dow fell almost 13% in 1929 during the Wall Street crash at the brink of the Great Depression, or when it fell 22% in 1987. That day is known as Black Monday or Black Tuesday. If that doesn't make sense to you, maybe this will. Let's compare the stock markets to mountains. On February 5th, 2018, we started out at 25,600 points, or let's just compare it to feet. Now, if you were to go 4.6% down that mountain, your view might change a little bit, but you still have a long way to go to this red line, which is bad. Now, back on October 19th, 1987, the mountain, which was much smaller at 2,200 feet, go 22.6% of the way down that mountain, and you've chipped off a lot more. So why does it seem like everyone is panicking over this? Well, analysts don't really know why the Dow took such a big dip this time. Take August 8th, 2011, for example. The Dow fell 634 points, or 5.5%. That was due to the European debt crisis. Countries were bailing out, and the European Central Bank announced a plan to purchase government bonds to keep countries from spiraling. So it's really hard to tell until they have an answer. Now, if you have any questions on what this might mean for you, go ahead and leave us your comments.